Welcome, wolves, to another vlog. Today we are creating a Tesla bull case because I just made recently a Tesla Q2 earnings video and it got a lot of attention. So I get a lot of DMs saying, hey, you just run through the summary of the bulls and the bears, so make another video where you just specified your biggest and strongest bull arguments, and this is what I did. So if you're new here, make sure you subscribe, and if you are coming back, thank you very much and smash that like button. So let's go. So if you are new here to this channel, you know that I'm a very strong shareholder of Tesla. I love the Tesla story. I love the product. I love the CEO Elon Musk. I'm reading every day hours about Tesla and new news, such as the negative news, but also the positive news, of course, and try to incorporate this into my strategy, into my investment strategy. And so far, I'm still very bullish on Tesla. I think the story just is in the very beginning, even though the company is already almost 2 decades old. And I love talking about that. So we will talk and look into some of the strongest bull arguments and why I think Tesla is a very good stock to invest. So stay tuned and let's dive into it. So first of all, if you anything remember at all of this vlog, make sure you remember this, because I think this is the strongest fact number that nobody can discuss about, and I think it's quite strong in terms of growth. It's showing that Tesla is still a very big growth company, and we see, actually, if we are looking into it, 60% revenue growth through all Tesla products. This is very strong. The overall revenue from around 4 to 6 billion this quarter only. So you see that from the quarter 1 year ago, the revenue rose 60%, and this is one of my most and best arguments, saying, look at the revenue, look how growing and exponentially growing this company is, though they are still having so much to come, so many products, and growing so fast. That is unbelievable, and such a great number this is, and it's growing faster and faster with the Gigafactory coming up. I think this is one of the biggest arguments for Tesla shareholder. This growth is really good. Coming to the revenue, of course, the revenue came through record sales delivery that they just announced, very strong this quarter. The Powerwall was also really good selling, and Tesla coming up now with some big mega battery packs, which they want to sell to government, to municipalities, and so on. So battery will be in the future a very big very big topic. Especially, I just read an article that at least in Germany, if we will have the double amount of electric cars, we would need also at least the double amount of power. So power constraints and weakness inside the power grid worldwide could be something that slow down the car sales, or because the power grid actually don't grow that fast like the sales and the upcoming revolution with electric cars. So this will be a very interesting point in the near future. So important to watch that the battery business actually will maybe even be bigger than the car business, because Tesla will also develop from car manufacturer to a more service company in a couple of years to a decade, where the cars will be more, shared and maybe owned by Tesla and the fleet, and you will just use cars for transportation. So a la Uber, you will order the car and it will come to your doorstep, and this is where Tesla could head. So the battery business could be a very, very strong and very, very important point, even though I think that maybe Tesla becoming a battery company in the near future. So very, very interesting point. Let's talk about cash, because cash is king. And Tesla just announced 5 billion cash on hand in the cash flow of Q2 earnings, which is a record number. And also there was a cash positive of 614 million US dollar. Never had so much cash on hand. To consider is that this is a very important number, because when the company don't make any profit, people start to look into this number. Because when Amazon, for example, was years and years not profitable, still there was very, very cash rich and cash flow positive, and this is important. Otherwise, if this number is also negative, then the company would have a problem. So we need to, though, consider, and to be fair, the 5 billion cash, 2.4, so half of it is just cash inflows through the latest raising of capital through shares and outside funding. Also Elon Musk put around, I think it was 20 or 40 or 50 million US dollars. I had to look it up, but a significant amount for us, maybe a small drop for him. And of course on the sum, on the amount that was raised was also very, very small, but significantly and symbolic. Of course, he stands behind Tesla with his own money. If you know the story of Tesla, he put his last money into the company and could rescue the company in front of the bankruptcy a couple of years ago. So very, very important that the founder still is so passionate about the products, about the company, very, very strong in this case. Now I would like to combine something. I would like to combine, but before combining anything, smash that thumbs up button, because this will help me to produce more of this content. If you are interested, if you are happy to watch The Wolf of Dubai, make sure you thumb up this video, and if you are new, make sure to subscribe. If we are going into the Capex now, this is a very important. So Capex is the capital spending by a company to create the revenue that it's making. So last year they made around $21 billion, and then against it is the Capex, the cost, what the company needs to produce this revenue. So it is important, and someone could expect it that the capital rise when the revenue grows so extreme like with Tesla. But this is actually not the case. Actually, Tesla just announced in last quarter that they will reduce the Capex from $2.5 billion that they expected to have for this year, to reduce it 60% to 1.5 or $2 billion only. And this would be, just the fast track to profitability. And this is very important. If you just know the two numbers, 60% more revenue year over year, and this year try to reduce the costs for this revenue by 60%. This would be unbelievable, though there's the small, let's say, hair in the soup, where short sellers would say, and saying actually, well, it's a growth story, it's a growth company, why are they trying to reduce Capex, they need Capex to grow and so on. And then, if Tesla take money, and they said it was the last money that they will take and raise, the short seller come again and say, why they raise, they will be never profitable. So I think this is the right way. I think they had enough time to grow over the years, and I think they are now in the turning point. But of course, Tesla, had a similar announcement inside this financials many years. So we have to be patient a couple more quarters, because coming to the next point, the China Gigafactory will open end of 2019 this year. So this will be huge, because not only China is the biggest electric vehicle market, but also through logistics and so on, through generating additional capacity for production and manufacturing. This is huge for Tesla. I think it was the one of the only car manufacturer, at least the US one, that have 100% own factory in China to produce for the Chinese market. And when they announced it and they put the pre-orders, the site actually crashed. So you see how much demand there is for the cars, and when they actually start to produce and roll out of this manufacturing, I think there is a big potential for Tesla. So we have to watch that. And you remember I talked about the Capex, and that they need 1.5 to 2 billion estimated versus the 2.5 billion. So if they really make it with 1.5 billion, and I'm very convinced with the new CFO that is very long in the company, and that took over from the CFO that retired actually. So there was no, let's say, that they went to another company or so on. The CFO retired, so Zach is the new CFO of Tesla, and he was very long time in Tesla. So very confident that Elon and him are a really good team already since years. And they are saying that they believe from the profitability that next quarter will be a break even. So they don't want to, or don't want to public any loss. And next quarter after that, so Q4 and all the followings, they want to stay profitable. So, these two numbers, the rising revenue as well, the reducing Capex, is straightway there. So hopefully they can make it, because if they cannot make it, of course, there will be bad news. It depends. If you're not long-term investor, then of course you have to really be careful what's the news and trade that. If you're a long-term investor, like for example me, I look into value, into growth of stocks, then I make sure that these are just temporary swings and volatility. If I see really a huge turning point in a couple of continuous quarters in the story, then I would jump out. But this short-term changing stock prices is totally fine, because the horizon, if you are value and long-term investing, is at least 10 years or more, or 5 years, if you are a little bit shorter range. But it's something that you not sell tomorrow just because there was one wrong prediction or whatsoever. It's something when the company totally take another step to another direction. However, they are staying to their statements. They just assured in the last Q2 earnings that they still want to make 360 to 400,000 vehicles this year. And boy, they really have to hurry up, because if you just calculate the numbers that they did in the first 2 quarters, they would not reach it. So they have to increase that, and they said they are going to increase that. So we are very looking forward to that. Last 2 things for this vlog. So for once, the Model Y will be bigger than the Model 3 market. This is what Elon Musk said now a couple of times. He said, like, when the market for, I think it was like 500,000 Model 3s or more, and then they said like in 1.2 million for Model Y. And also Elon Musk, I don't remember in which presentation or interview he said it, but he said that the Model Y presentation was on point, kept low profile also with the function and features, because they were scared that people will wait and not buy the Model 3 and wait for the Model Y. But the Tesla really need the sales and the deliveries for Model 3 to survive and to move forward. Otherwise there will be not Model Y. So this is a very important point because the market for the Model Y will be bigger, and they just confirmed that it's going to be fall 2020 next year when the first roll out the factory, which is very, very positive for Tesla. And the last thing that was mentioned, and it's very important, with all these numbers, they believe they don't need to raise any capital anymore, which means that they would make history and would be a self-funded company from now on with profits. This would, I believe, if they make it 4 times in a row to be profitable in the quarters, then they would be eligible to go into the S&P 500, and then this would bring them into all the index funds and so on and so forth. So this would be a very big push for the stock, and I believe that this can happen towards next year, end of next year earliest, and with all this upcoming thing like China with Model Y and so on, I think there's huge potential in this stock, in this company, in this team, in Elon Musk as well. Of course, he's the pushing captain behind the ship. So I really enjoyed to make this video for you because Tesla is such an incredible company and still on its way. Still I see green for the stock. Very important that you research for your own before making any investments, of course. And don't forget, the grass is greener on the other side. Enjoy my other videos. Peace.